Please do not move the mic. It's affecting the recordings. I'll nadu podunga. Please don't keep the water bottle in the zone. Please don't move the iPad.
Hi, Shifa. You okay? How are you? Hey, you did FR with me, did you? What happened? Ah, great. How much is score? Okay, nice. What's your next paper? Audit, is it? Both in December? Oh, okay. FM with? FM is with? Rashwa? How is she? I saw you had a mock, right? Today? Um, Students are informed, right? Yes. Oh, okay. Can you? Okay. Hi, guys. Good afternoon. Can you all hear me clearly? Can you all hear me? Can you all hear me clearly? Afzal, Inshifa, Priyanka.
Yes, sir.
Okay, super. Lovely. Okay, superb. Let me firstly give a little introduction about myself, and then let me take you through what we are going to do during this expert revision session, right? Well, you know me, some of you are coming on YouTube, some of you are coming from different parts of the world, I know, and some of you are going to watch this before your exams as well. Well, I'm Ziyan. I've been lecturing for ACCA over now a little over 10 years. Uh, I've been lecturing for financial accounting, financial reporting, audit and assurance paper, strategic business reporting, and AAA, advanced audit and assurance paper. I am also a prize winner for the audit and assurance for the APM, Advanced Performance Management subject, and I have produced consistent, continuous prize winners over a period of time entirely. I'm happy to say that last September, this September, 2024 September, we produced the world prize, world number 1 from Sri Lanka, was one of my students. Before that, the previous session, that is last September, this September, we produced for audit and assurance. The student became the world prize winner by scoring 92 marks for the audit paper. Before that, in June, also I had the prize winner, Sri Lankan number 1. March, also I had the prize winner, Sri Lankan number 1. So March, June, September, Sri Lankan prizes, and then a world prize. So hopefully December, one of you will be a prize winner, hopefully. But let's see. Let's come to that. But our plan, right? We have 1 month to go for the exams, correct? So we have exactly 1 month to go for the exam, and with a month's time to go for the exams, I have to tell you, okay, most students joining in. Okay, guys, so that our students also know, other students also know that, we produced world number 1 for the September exams. PPIM did it. In June, we had a Sri Lankan prize winner. In March, we had a Sri Lankan prize winner for audit and assurance subject. Meaning this year, entirely we've dominated the Sri Lankan market and also the world market with ACCA prizes for audit and assurance. Now, if you look at FR, another subject that I teach, still PPIM has been producing continuous world prizes with a world rank 2 and PM with a world rank 3. So probably you know the credentials, you know what PPM is all about. And now we are focusing our shift, we're shifting our gear back to the December exams. Brilliant. with a month to go for the December exams, right? The plan is very simple. Past papers. When you take audit and assurance as a subject, right? It is a subject which has a lower pass rate, but we've been maintaining very high pass rate, and the magic, the secret is what we are going to look at. So I'm sure you have completed 100% of the syllabus, but even if you have not completed, it's still fine. I'm gonna pick the areas which are very, 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 very important and discuss during our TRG expert revision session. You get it? Are you clear? Can I get everyone to give me a hi, please? There you go. Hi, Inshifa. Hi, Chankri. Niklesh. Hi, Afzal. Hi, Priyanka. Hi, Ashraf. Okay, brilliant. Super. So coming back, uh, let's look at our paper. Now, when you look at our paper, audit and assurance has 2 sections, section A and section B. So any other skills level paper will have section A, B, and C, but our paper is slightly different. It has section A and section B only. When you take our section A, guys, it is for 30 marks. 30 marks, it's based on scenarios, MCQs, multiple response, drag and drop. You can have different areas. But our focus is shifting on to section B now, right? When you look at section B, we are primarily looking at, we trying to score 70 marks. So, like I told you, we've got sections A and section B. section A is going to be for 30 marks and section B is going to be for 70 marks. Is that clear, everyone? Are we clear? Okay. Now, guys, primarily, when we look at section B, right, your examiner says certain areas will be tested, definitely tested. There's no two words about it. For example, number one, audit risk. Audit risk will definitely be tested in your exam for about 15 to 20 marks. So minimum, let's say about 15 marks. You're definitely getting no arguments there, no negotiations there. You're getting audit risk there. No reservations, no arguments. You're getting it. Meaning we have to be prepared for it. Yes or no? So, number two, you're going to get controls. Systems and controls. So if you take a company, there are controls, right? Now, are these controls effective enough? So you get that as well. Now I'll come to in-depth analysis, in-depth practicing in a moment. But I'm going to show you the areas that you have to start focusing primarily. Number three, procedures. Procedures is another important area of your syllabus. Substantive procedures. You can get, okay, controls can come up to about 15 marks. Procedures can come up to about 20 to 25 marks. 20 to 25 marks, this can come in the exam. So you understand how crucial this is. Correct? Okay. Number 4, review and reporting. This can also come for about 10 marks. Now, I'm talking to you about 25, 35, 40, 55, about 65% of your syllabus in section B. And then, of course, you can have ethics. Ethics can also be tested. Okay. Now, guys, if you are looking at getting through the paper, getting through audit and assurance, well, let me tell you something. From this point onwards, you have a month, easily a month. If you ask me, Ziyan, is 1 month enough for me to get through the exam, audit and assurance? Easily more than 80 if you study now. If you start studying now, easily more than 80. This time we had 92. I would be happy if you can score above 90. But if you ask me, can you do it? You can do it. You are not too late for it. So if you have not paid for the exams, you have another 2 more days. You can go and pay for the exams. That is possible. And slots are open. If you do not know how to pay for the exams, contact PPIM. They'll pay on behalf of you. Meaning you have to pay them. So they'll help you how to pay. Number 1. Number 2, but the decision that you're making now, with this mindset motivation, it has to continue until exam. You can't decide to pay for the exam and decide to start studying in 2 weeks' time. Okay, let me start studying the last 2 weeks of the exams. I'm used to it. No. That doesn't work with professional qualification. Particular qualification like ACCA, specifically a subject like audit, which has continuous low pass, it doesn't work. You got to make sure you start now, you decide now, you're going to get through the paper. That's how it has to be. Are we clear? Okay, super. The second thing, me, myself, Farin and Lahiru. Lahiru completed the theory, right? Brilliantly done, on spot with the syllabus. Now I'm going to start off with the revision. While doing the revision, I will also make sure that I'll take you through the theory. But we are not stopping there. Here, if you've been our student and if you have registered for our classes, what we are also going to do is, we are running a marathon session. Now you're confused. What is this marathon session? I don't know what is this marathon session. A marathon session means for continuous 4 days, we quickly summarize through all the major topics. So I'm also going to do it. There'll be a marathon session that will be happening. You can join that also. Who is doing it? Farin is doing it. So theory is covered. Past papers are covered. I'll be there until the last moment with you. Farin is doing Financial is doing a marathon session also. But we are not stopping there. We have produced some chart notes. What do I mean by chart notes? Is some concepts, mind mapping concepts. So the team will be uploading that also for you so that you can always go and view the theoretical aspects. Are we clear? Are we clear, everyone? Understood? Only Inchiva says yes, so others are not clear, is it? Only Inchiva is clear, others are not clear. Okay, Priyanka, go on, go on, go on, go on, go on, go on. Right. Now, like I told you, we've got about 4 to 5 areas now. I want to make sure that you are very, very comfortable in these 5 areas, 70% of the syllabus. Very, very, very comfortable. So I'm going to do all the possible questions for this 70%. Because we have a limited number of hours, 4 hours of 5 sessions, 4 into 4 or 5 sessions. That's it. In the meantime, I will also guide you through other areas. Okay. I can't promise that, I will be able to complete the syllabus now. Because syllabus videos are already there with you. You can always go back and watch it. I'm here to entirely take you through how to prepare for exam successfully. Okay. Looks like a deal. Super. Now, when you take your syllabus, like I told you, audit risk is a primary area. Okay. So, audit risk is a primary, very important area. Okay. Right. Students, what is audit risk, everyone? What is audit risk? What do you think audit risk is? What is audit risk? Anybody? What is audit risk? Anyone? Audit risk? Okay. Now, can I get a yes or no answer? I have studied audit risk. Yes, give me a Y. No, give me a N. I have studied audit risk. Yes, give me a Y. No, give me a N. That's okay if you have not studied. Don't worry. I'm going to take you through that. Be honest so that it's very easy for me to understand your mindset. I have studied. Saifullah says yes. Okay. Afzal says no. Shankri says yes. Inchifa says yes. Okay, brilliant. Priyanka, yes. Okay, super. No problem. Do you want me to give a background before I jump into a question? Do you want me to give a little background before I jump into a question? Yes, give me an A. No, give me a B. Okay, you want a background. Okay, brilliant. Nothing to worry. Let me give you a background. Right. Now, guys, why do we audit? The reason why we are auditing is to go and check the financial statements, to verify the financial statements, if the financial statements are correct or incorrect. Yes. So the reason to audit is simply a verification of the financial statements, correct? Okay. Now, guys, audit risk simply means risk of an auditor giving the wrong opinion. Audit risk means risk of an auditor giving the wrong opinion. Now, I'm going to take this in depth. Okay. I'm going to teach you in depth. Okay. Risk of an auditor giving the wrong opinion means, okay. Now, financial statements are there. No, we are going to verify it. No, like I told you, we are going to verify the financial statements. When you verify the financial statements, okay, as an auditor, you are going to check if the financial statements are correct or incorrect. When you verify, The process is not an easy process. It's a long process. Keep that in mind. But let's say the financial statements contain a material misstatement, meaning there is a problem with the financial statements. When there is a problem with the financial statements, you as an auditor, you go and say, no, there's no problem with the financial statements. In other words, there is a problem with the financial statements. You go and say there's no problem with the financial statements. You are giving an incorrect opinion. Yes or no? Yes or no? Yes or no? What is the color of this mouse? What is the color of this mouse? Black. But I go and say, no, this is white. I'm giving a wrong opinion. Like that, financial statements are wrong, incorrect. I go and say, no, it's correct. When we are auditing, there is a risk like that. You can't say auditors will always give the correct opinion. No, they can go wrong. How will they go wrong? Why will they go wrong? I'll tell you, don't worry. But do you understand that audit risk is the risk of an auditor going wrong? Number one. Okay, why will they go wrong? AR, technically audit risk, the risk of the auditor giving the wrong opinion is made up of IR, inherent risk, into control risk, into detection risk. IR into CR into DR. So if the auditor is going to give a wrong opinion, it is primarily because of these three reasons: inherent risk, control risk, and detection risk. What is inherent risk? Inherent risk is the risk or the birth of an error. Inherent risk means birth of an error. Where? In the financial statements. In the financial statements, an error is being born. That is inherent risk. Okay, Ziyan, what do you mean by in the financial statements, inherent risk is being born? In the financial statements, an error is being born? Meaning, let's think about an example. Okay, let's think about an example. In Shifa, okay, in Shifa. Who's your favorite actor in Shifa? Who's your favorite actor? In Shifa, do you have any actors in mind that you like? Do you watch movies? Who's your favorite actor? I tell you, in Shifa. I'm waiting. Sai Pallavi, okay. She says, not an actor, she's into actress. She says, okay, I like this girl called Sai Pallavi. Oh, I went to watch this movie yesterday. Amaran, she's very, very good. The way she acted was very brilliant performance. Okay. Anyway, coming back. Sai Pallavi is your favorite actress. Okay. Let's say, okay, fine. Sai Pallavi's favorite actress. Okay, no problem. Let's say all of us in this class, we love Sai Pallavi. Not for anything, for her acting skills. Okay, not anything else. Okay, she's beautiful, all this is fine, but we love her for her acting skills. Let's say we love her. We are super fan of her. We'll do anything for her, like for Michael Jackson. For Michael Jackson, he had a fan base that they'll do anything for him. So like that. Okay, understood the concept? Now, Sai Pallavi comes and promotes a brand, maybe Coca-Cola. Sai Pallavi comes and promotes Coca-Cola. We love her, we do anything for her. Then, when she promotes Coca-Cola, will we have Coca-Cola, yes or no? If Sai Pallavi promotes, she is the brand ambassador of Coca-Cola, will we have Coca-Cola, yes or no? Tell me that. Yes or no? Yes, give me an A, no, give me a B. Saifullah, Afzal, super. We love her. We'll do anything for her. Then obviously, Vijay, right? Vijay was acting and all of a sudden he went to politics. You have to look at the number of people who turned up for his event. Massive. We will do anything for Sai Pallavi. Super. If she's drinking Coke, I am going to drink Coke. Mama, Mummy, I don't want anything. Amma, Mummy, Umma, whatever we call, we don't want anything. Sai Pallavi is drinking Coca-Cola. I want Coca-Cola. I don't want water. I don't want water. So, Pepsi understands. Oh, Coca-Cola's branding is with Sai Pallavi. Sai Pallavi is promoting the brand. And technically, the number of bottles produced by Coca-Cola is going to go up. Correct? No? Because we are all going to drink. The demand for Coca-Cola is going to go up. Sai Pallavi says, Pepsi goes to Sai Pallavi and says, hey, look, they are paying you $1 million. I'll pay you $5 million. Don't promote Coke. Come and promote Pepsi. Will Sai Pallavi go to Pepsi? Obviously. Who gives me more money? I'll go there, obviously. She is going to go. $1 million. She say $1 million, $1 extra you give me, I'm coming. So she goes to where? She goes to Pepsi. Now Coca-Cola's demand will come down. Why? With her, all of us are going to go and consume Pepsi. Yes or no? Correct. Super. Then what happens? Coca-Cola will have bottles. Coca-Cola will have bottles, Coke bottles, which are unsold, not sold. If Coca-Cola bottles are not sold, then what will happen? As at the year end, IAS 2 inventory says to value inventories at cost or NRV, whichever is lower. Correct. But if you don't do that, your NRV is probably less than the cost. Birth of an error. What is the birth of an error? The error is the financial statements when you take, assets are overstated because your inventories are overstated and your profits are overstated. Yes or no? Yes or no? Birth of an error. Yes or no? Hello? Everybody please respond. You understood how an error can be born in the financial statements, correct? Okay. The birth of an error, guys, can be due to the nature of the industry, a change in an industry, an impairment coming in. Okay, your industry changed, maybe from cinema to Netflix, you've changed. So from a cinema's point of view, theaters point of view, you've got screens, you've got theaters which are not utilized, so you have to do an impairment test. Your assets are overstated, your profits are overstated. So all these are there. That's where a birth of an error comes in. If there is an error which is being born, this error has to be detected by the controls of a company. So you have inherently error being born in the financial statements. That will happen. But if you have that, your controls of a company, the reason why we have controls is to make sure you detect a material misstatement from happening. For example, we have a CCTV camera. CCTV camera is a control. Fingerprint system is a control. Password, control. So when you take a company should have rigid, strong control system. If the control system is not strong and rigid, then what happens? The error will continue to be in the financial statements. The error is born, it is continuing. The controls are not detecting birth of an error. The error going through the controls within the company, and then it's still there in the financial statements, and then it comes to the auditor. Now, auditor takes the financial statements, looks for the error, but they are not able to identify it. That is detection risk, DR. When the auditor cannot detect a material misstatement, okay, Ziyan, why will the auditor not be able to detect a material misstatement? The auditor will not be able to detect a material misstatement due to two reasons. Number one, sampling risk, and number 2, non-sampling risk. Okay, Ziyan, what do you mean by sampling risk? Okay, sampling risk means audit is done on a sample basis. You know, you would have studied monetary sampling, haphazard sampling, random sampling, systematic sampling. You would have studied a list of sampling techniques, correct? Okay. Now you apply a sampling technique. Okay, you have a population of 10. Okay. Out of that, you pick 5 for your sample. So you are checking all these 5. This 5 is okay. Remaining 5, 2 has a problem. So our sample was not correct. So there's a sampling risk, number 1. An error is being born. It goes to the controls of a company. And then it comes to the auditor. The auditor is not able to capture it due to one reason is going to be sampling risk. The second risk is non-sampling risk. What do I mean by non-sampling risk? Is you're not properly planning the audit. Your juniors are not trained. You don't have trained members. You don't have experienced members. You don't have qualified members. So basically what happens is an error which is being born goes through the entire system placed by the company management and then the auditor. And finally, the error, the mistake is there in the financial statements. Then it becomes an audit risk. Are we clear? Are we clear? Are we clear? Entirely understood? Yes or no? Sorry. What? Why? Saifullah, why do you give that look? Why do you give that look? Okay. Now, well, if you ask me, will you examine a computer and ask you, okay, tell me what is inherent risk, what is control risk, what is detection risk for 20 marks? Never ever happens like that. No, it doesn't happen like that. Maybe theory can be tested for about 3 marks. What is inherent risk? Inherent risk is the risk of an error being born in the financial statements due to nature of an industry, change in an industry, complex transaction. Control risk. What is control risk? Control risk is when the controls of a company do not detect an error which is born. An error is born under inherent risk that is not detected by the control. Why? Because staff training is not provided. There can be fraud. Qualified members are not there. Deficiencies in control system. Because of that, your controls don't capture. Now you have a CCTV camera. CCTV camera is not facing the cashier in kills. There's a problem with the CCTV camera, no guys. Why do you have CCTV camera? In kills, it has to be right on top of the cashier so that you can see the cash. If the cash is being taken or not from the customers, correct? Now, let's say it is not being directed towards the cash, but towards maybe the washroom, toilet. Then there's a problem with the CCTV camera. You understand? So that means you have a control. The control is not efficient. So control risk is the risk of controls not detecting, preventing, correcting material misstatement. And then it goes to the auditor. Auditor also does not capture. Why? Because of sampling and non-sampling risk. If you know that your 3 marks theory, you can get it. If you take Kaplan, or if you go to Study Hub, yes, they have given a very confusing definition. But you don't have to be right that kind. You don't have to memorize and go. No, just write what I have given you right now. That is enough for you to get your 2 to 3 marks in the exam. Understood? We go further. Examination approach. Examination approach. Okay. In the exam, I want you to follow some steps. Like how I give steps so far. Some steps. What are the steps? I call it MTRR approach, not NTR. It is MTRR approach. Okay, what is this MTRR approach? First, in the exam, you need to see if something is materiality. You have to check. And error becomes a problem only if it is material. So materiality, you know, is based on what? Materiality is based on profits, assets, and revenue. Perfectly understood. Super, Saifullah. So happy that you understood. So materiality is dependent on profits, assets, and revenue. You know that already, correct? Okay. 2, you have to look at the treatment. How has it been treated in the financial statements? Number 3, you have to give the risk. For example, for example, your examiner will say research cost of 5 million is capitalized. Research cost of 5 million is capitalized. Your examiner will say research cost of 5 million is capitalized. Okay. 5 million, you need to check if it is material or not. So for you to check if this is material or not, you need to know your profits, you need to know your assets or revenue. 5 to 10% of profits, 1 to 2% of assets, and 0.5% to 1% of revenue. You probably know that, correct? I'm not going to go sit and work that round. You know that. Okay. Now in the exam, your examiner is going to give you your revenue, your assets, or your profits. You're going to take this 5 million, and let's say your revenue is 100 million. 5 over 100, you calculate the materiality. That is its materiality. And then treatment, research cost, RC, research cost. Research cost is capitalized. Correct or incorrect treatment? Correct or incorrect? Guys, tell me. Correct or incorrect? Go on, go on. Go on. Go on. 3 has given me answers. Another 4 more to go. Tirza says incorrect. Okay, super. Go on, go on. Afzal, incorrect. Okay, super. Yes, that's right. Research cost. Well done, Priyanka. Research cost cannot be capitalized in line with IAS 38 intangible asset. So, cannot be capitalized. It has to be expensed. So, if you have gone and capitalized, that means your treatment is wrong. How you have treated is wrong. Treatment is wrong in line with an accounting standard. Correct. So if your treatment is wrong with an in line with an accounting standard, you're going to tell the examiner, hey, look, your treatment is wrong. Exam is going to give you a scenario. You're going to tell the examiner, look, this is not how it is. This is incorrect. Okay, so because of that, what is the risk? Now you tell me, what is the risk? Risk for elements of financial statements. When I say elements of financial statements, I'm talking about assets, liabilities, expenses, income, equity. Now, if research cost is capitalized, what is affected with your elements? What is affected? Tell me. What is affected? Saifullah, superb, well done. I love that answer. Assets are affected. Superb, Minshifa, well done. Well done, Afzal. Superb, superb, superb. 1, assets are affected. Then what else is affected? Well done, Tirza. Expenses are affected. So basically, your assets, now you're going to tell me, will your assets be overstated or understated? Your assets will be overstated or understated. Well done, well done, well done, well done. Your assets are overstated because your research cost is being capitalized. Love the response. Your assets are overstated. Brilliant. Your expenses are, your expenses are, your expenses are. Well done, Tirza. Superb. Well done. Your expenses are understated. Well done. Super. Good job. So in the exam, you're going to say, look, this is material number 1. Number 2, the treatment is wrong. Because of that, what is the risk? What is overstated? What is understated? And then you are going to give a response. Now let's handle it logically. Okay, let's not memorize anything. Okay, let's handle it logically easy. Let's go. Let's take step by step. Okay, response. Now you are the auditor. Now you know the treatment is wrong. Correct. Your treatment is wrong. Whose treatment? The financial statements prepared by the finance director probably is wrong. Now you're going to respond professionally. But when you're responding, you have to, if possible, connect to the standard. You're going to say, hey, look, research cost cannot be capitalized. Instead, it has to be expensed in line with IAS 38 intangible assets. Are we clear? Are we clear, everyone? Yes or no? Are we clear? If you know this, you can crack your audit and assurance exams, audit risk. That easy. Don't worry. Okay. Can we copy this? Can you quickly copy this and give me a done? I want you to copy it and give me a done so that I can continue going. Yeah. Therefore, you took a screenshot, right? Okay. Guys, understand? Done. Am I clear? I want you to talk to me. I want you to, once you're done, you're going to tell me, okay, Ziyan, I'm done, so that I can quickly start off. Continue. Okay, done. Super. We are directly looking at a question. Okay. We're directly looking at an exam standard question. Okay. Give me a moment. Okay. Okay. Super. Okay. Why does this have a problem? Can I move out? Okay, super. Okay. Oh, why do I have a problem with this? Okay, let's go to the requirement. Okay, explain audit risk and components of audit risk. Explain audit risk and components of audit risk. You know, audit risk is a risk of an auditor giving the wrong opinion. Components of audit risk: inherent risk, control risk, detection risk. Inherent risk, what is inherent risk? Risk of an error being born. Control risk is what? Controls not detecting the error that is being born. And then detection risk is what? The auditor not detecting the error due to sampling and unsampling risk. If you can explain that, you get your marks. Do you want me to write the points there? Yes or no? Let me adjust the AC. Do you want me to write the points there? Yes or no? Do you want the points written, guys? One by one, do you want it written? Are you okay? Shall I write it for you? Okay. So, risk of auditor giving the wrong opinion. Number one. Let's do one. Okay, no problem. Risk of auditor giving the wrong opinion. Number one. That's your first point. Second point, we're going to talk about the components of audit risk: inherent risk, control risk, detection risk. Inherent risk, birth of an error. Why do you have an error? Number one, nature of the industry, maybe change in industry, and then control risk, controls not detecting, preventing, or controlling the error. Detection risk, auditor not detecting the error due to sampling and non-sampling risk. Are we clear? Are we clear? Understood? Hello. Now moving on. Now moving on. Using the minutes provided. So they have given us some minutes. Identify and describe 6 audit risks. 2 things. You're going to identify. Identify means pick from the scenario, and describe 6 audit risks and explain the auditor's response to each of the risks in planning the audit of Minty Cola. Identify the risk from the scenario. Identification comes from the scenario, and explain. Identify, explain, and then respond. So there are 2 things, actually, in fact, 3 things that you're going to do. So let me put up a little Excel to show you how this is tested in the exam. Right? Now, guys, when you take your exam, in your exam, when audit risk is tested, this is how it will be tested. Okay. 6 audit risk, right? Audit risk, auditors response. Okay. So 1, 2, 3, 4, 5, 5, 6. You are going to give 6 audit risk, and for every audit risk, you're going to give auditor's response. Audit risk means you pick from the scenario, identify and explain. Take it from the scenario and explain why it's a problem. Auditor's response, auditor's response is from your thinking you have to give. You have to think and give. But whatever we do, we got to make sure that we follow the approach that I just taught you. MTRR. M stands for materiality, treatment, risk, response. We follow MTRR, you get your answers. Okay? Shall we see how to do a proper real exam question on audit risk, guys? Can we? Can we? Okay. Students who have already applied for exams, give me a yes. Students who have already applied for the exams, give me a yes. Okay. Nabil done. Inchifa. Chantri. Okay. 1, 2, 3. Saifullah is going to apply today. Priyanka has applied already. Ashraf, have you applied? Afzal, are you going to apply? So 1, 2, 3. Afzal, are you going to apply? Yes. Tirza, are you going to apply? Or have you applied, Tirza? Yes, is to going to apply or applied already? So all of you are going to sit for the exams. Brilliant. Don't worry. Let's work this out. I'll tell you how to do it. Okay. First 1 or 2 questions is going to be a bit challenging, but as we do further, you will be able to understand it entirely. Okay. Well done. Let's come back over here. In the exam, always, the very first thing that you are going to do is go and check the requirement. After checking the requirement, we are going to tailor our response based on the requirement. Okay. Right. Now, I'm giving you a proper 5 minutes to read the scenario on your own. I just want you to not focus on anything around you. Just read the question and see, check for the areas where you find there could be an issue. Just read is what I want. Okay. 5 minutes. Now it's 2:50. I'm giving you time until 2:55. Once you go through, you're going to give me a done. Everyone with me? Super. Start. In the meantime, I'm going to fill some water. Did you get it to the group? Now, did you get it to the group? Okay, your time is over. Done? Everyone, can I get it done? Your time is over. Can I get it done? Others, can I get it done? Super. There are risks. Yeah. There are risks. Obviously, that's why your examiner has given you the requirement. There are risks. Examiner is not crazy to give you a question without risk. How are you, mate? You okay, Nabil? Okay. Now let's try to analyze this in depth, guys. Okay, let's try to understand this question. Minty Cola, Minty manufactures fizzy drinks such as cola and lemonade, as well as other soft drinks, and its year end is 31st December 2013. You are the audit manager. You are given a position to play. You are the audit manager. In your audit and assurance exams, they are going to give you positions to play. You're going to role play. Not the role play that you're thinking of, but role play as an audit senior, as an audit manager. So you're looking at a position at a higher level, but not audit partner. It's not audit partner. You don't get audit partner. Audit senior, audit manager. Okay. You are the audit manager of a company, which is P, and are currently planning the audit. Okay. Planning. Now, when you take planning, audit planning is very crucial, guys. Now, I know this is not a part of our requirement, but do you remember the remaining 30% I was talking to you about? I'll try to cover somewhere in the syllabus. I'll give you some updates about it. So that's what I'm going to talk about. Now, guys, everything needs planning. Just imagine a marriage without planning. My marriage was something like that. Because it came during COVID, okay? So basically, planning was very difficult. Now just imagine planning and doing an audit, or not planning and doing an audit. When you plan, you know what exactly you're looking at, your resources. So audit planning is very, very, very important. Why is it important? Number one, when you plan, there is resource allocation. This team member is going to this audit, John Kill's audit. This team member is going to Dialogue's audit. This team member is going to maybe, Tata Steel in India. I know students from India watching this through YouTube probably. Okay, Tata Steel's audit. This set of team is going to Reliance. So resource allocation is very important. So when you plan, you can allocate your resources. Number one. Number two, when you plan, you know your deadlines exactly. I have to finish it before this particular timeline. You can inform. Delegation of work is there. Number two. So deadlines, dedication, that's where your interim audit and final audit comes in. Okay, should I go in between the calendar year and do an audit, or should I do an audit once the financial statements are done and dusted? Why do you plan? You can plan materiality. Each and every client will have their own materiality. And obviously, audit planning is a part of a bigger picture called audit strategy. What is audit strategy? Audit strategy sets the scope, timing, and direction of the audit. Are we clear? So planning is a must. We know which manager is going to review the job. When is he going to review the job? Who is allocated with the job? Is he doing the job? You get my point. So planning is important, and planning is a part of audit strategy, which sets the scope, timing, and direction of the audit overall. Got it? Everyone is on. Got it? Everyone is on. Okay, super. Now, you attended the planning meeting with the engagement partner. So when the meeting happened, you were there, and the finance director last week, and recorded the minutes from the meeting shown below, and you are reviewing this as a part of the process of preparing the audit strategy. Now, what is audit strategy? It sets out the scope, timing, direction of the audit. And a lesser version of audit strategy is your audit planning. Are we clear? Now, see, we've covered that. Let's go further. Minutes of planning meeting for Minty. Okay. Minty's trading results have been strong this year. Strong trading results, and the company is forecasting a revenue of 85 million. Okay, now tell me, why have they given you this 85 million? Why have they given you this 85 million? What is the reason? What is the reason to give this 85 million? Well done, Saifullah. Superb. Good job. It's given to check materiality. Materiality, well done, officer. Well done. Materiality on revenue is how many percent? Materiality on revenue is how many percent? Guys, everybody start responding. Materiality on revenue is how many percent? Hmm? Oh, in Shifa, no, that is for profits in Shifa. That is for profits in Shifa. For revenue, profits it's 5 to 10%. On revenue, it's basically normally between 0.5% to 2%. 1 to 2%. That's okay. Okay. Which is an increase from the previous year. Nabil, okay. He's saying 1%. Yeah, 1%. But it is basically a judgment call. Okay. Okay. Let's go with 1%, 0.5 to 1%. No problem. Some entities, some go with 2%, but that's okay. I'll go with 0.5 to 2%. That's fine. The company has invested significantly in the cola and fizzy drinks production process at the factory. This resulted in expenditure of 5 million on updating, repairing, and replacing a significant amount of the machinery used in the production process. Now, read this paragraph again on your own. I want everyone to read it on your own. This paragraph. That paragraph again on your own. Okay, coming back. Your examiner is saying here, the company has invested significantly in the coal and fizzy drinks production process at the factory. This resulted in expenditure of 5 million on updating, repairing, and replacing a significant amount of the machinery used in the production process. Resulted in expenditure of 5 million on updating, repairing, and replacing. Okay, there you go. 5 million on updating, repairing, and replacing. You've spent 5 million. First thing in the exam, the moment I see a figure, what I will do is I will go and calculate if this 5 million falls within the materiality range. So for that, what will I do? I will obviously take my 5 million as a percentage. 5 million over 85 million as a percentage. Take your calculators. 5 million over 85 into 100 gives you 5 million over 85 million into 100 gives you hello 5.8%. 5.8%. Now you have to tell me if this 5.8% is material or not material. Everyone. 5.8% is material or not material? It's more than 1%. It's more than 1%. Conclusion, it is material. So coming back, what are we looking at? We are looking at materiality. Correct. We're looking at materiality. Number one, we conclude it is material. Now we have to look at the treatment. They say this resulted in expenditure of 5 million on updating, repairing, and replacing a significant amount of machinery used in the production process. 5 million on updating, repairing, and replacing. The problem here is you're spending 5 million on three things: on updates, on repairs, on replacement. Now, how should this 5 million be treated? Is this a capital expenditure or is this a revenue expenditure? What is it? Is it a capital expenditure or is this a revenue expenditure? Is this a capital expenditure or revenue expenditure? Okay, both are right. Revenue, repairs, revenue, replacement, capital. Okay. Now the confusion is you have capital expenditure in terms of replacement. Your repairs and updating probably qualifies to be revenue expenditure. So the problem is, it looks like your revenue expenditure can also be treated as capital expenditure. If your revenue expenditure is also treated as capital expenditure, what will happen to your assets? Meaning your property, plant and equipment, because they are invested in the process of the factory. Yes, so your property, plant and equipment will be overstated or understated. Will be overstated or understated. Well done in Shifa. Well done in Shifa. Others, I want everyone to respond. Your property, plant and equipment will be overstated or understated. Everyone respond. If your revenue expenditure is treated as a capital expenditure, Your property, plant, and equipment will be overstated or understated. Your revenue expenditure is treated as a capital expenditure. Nabil, your property, plant, and equipment is understated or overstated. Priyanka, superb. Your property, plant, and equipment is overstated. If your PPE is overstated, that means your profits are also overstated because your expenses are understated. So it goes against the prudence concept. The risk is that property, plant, and equipment is overstated. Your profits are also overstated. Are we clear? Are we clear? Yes or no? Are we clear? Understood? Okay. That's the first risk that we have. Risk number one. Now, number two. As the level of production has increased, the company has expanded the number of warehouses it uses to store inventory. It now utilizes 15 warehouses. Some are owned by Minty and some are rented from third parties. There will be inventory counts taking place at all 15 of the sites at the year end. As the level of production has increased, the company has expanded the number of warehouses it uses to store its inventory. It now utilizes 15 warehouses. Some are owned by Minty and some are rented from third parties. Okay, read that statement again. Read that paragraph again. Read that again. Read that again on your own. Read that again. Okay. They say, now you have 15 warehouses. How many warehouses? 15 warehouses. Some are owned by Minty, some are rented out. Some are owned, some are rented out. From whom? Third parties. There will be inventory counts taking place at all 15 of these sites at the year end. Now the problem is, listen to me very carefully. Now the problem is, you have 15 warehouses. Some are owned and some are rented from third parties. Let's stop there. Some are owned, some are rented from third parties. Are we clear? Some are owned and some are rented from third parties. Okay, what is the risk there? What is the issue there? What is the risk there? Your rented one is there, right? So technically you have warehouses. Okay. Saifullah, superb. Assets could be overstated, but why Saifullah? Now you need to tell me why. Don't just tell me assets are overstated. Now tell me why. You have rented warehouses. What if you consider them as your own warehouses? Rented means you're going to just spend on expenses, right? Rental expenses. You don't do that. What you try to do is you tell the auditors, hey, look, this is also mine. This building is also mine. So you don't charge a rental expense. You probably tell the auditors, hey, look, all 15 are mine. It's mine. I own it. Meaning the rented warehouse is shown as what? Owned warehouse. If you do that, your assets are overstated, fine. But I want you to go one step ahead and say your property, plant, and equipment is overstated. Your property is overstated. Where about plant and equipment, your property, you have to go in depth and say which particular asset is overstated. Property, plant, equipment, intangible assets, whatever. You need to go in depth and tell the examiner. Are we clear? Are we clear, everyone? Yes or no? Are we clear, everyone? Yes or no? Afzal, no, you didn't understand, is it? Afzal, no, you didn't understand? Do you want me to repeat, Afzal? Okay, let me repeat. Afzal, now you have 15 warehouses. Okay. They say some are owned, maybe 10 are owned, 5 are not owned, but you have warehouses. But what do? You have a technical issue only 10, no? In your financial statements, you put all 15 as yours. Property in Bambalapitiya, property in Bellavatta, property in Beruvala, property in Panadura, property in Ratnapura. That you put all 15. You don't show the ones you have rented, you don't show it separately as rented. You don't charge rental expenses. You just put everything together, correct or incorrect treatment. Correct or incorrect treatment. There you go. That's my point. Incorrect treatment. Incorrect treatment. Incorrect treatment. There you go. Understood now? Got it. Super. There will be inventory counts taking place at all 15 of these sites as at the year end. As at the year end, you're going to do an inventory count in all 15. But the problem is, when an inventory count takes place, it's always better for the auditor to be present. Now, the risk here is we do not know to which, when we are picking the sample, we do not know to which we will go. Probably, some warehouses where there's a problem, we probably might not go. You understand? So the problem is the inventory value as at the year end correct or incorrect? Is it correct or incorrect? Are we clear? Understood? So we have to work on that also. Guys, just go through these two. They say my car is blocking. I'll immediately move my car and come back. Okay. Give me about 2 to 3 minutes. Okay. Next point. A new accounting general ledger has been introduced at the beginning of the year with the old and new systems being run in parallel for a period of 2 months. Guys, this is a common risk, okay? The moment you see in the exam, this particular point, close your eyes, put it as an audit risk. In the exam, there are some repetitive risks. Your examiner over a period of time has mentioned a risk twice, thrice. I mean, there is continuous risks. So based on that, there are some general statements I'll tell you in the exam. Your examiner can say, the company is listed. If the company is listed, close your eyes, it's an audit risk. Why? Why? The reason being, if the company is listed, listen to me very carefully, financial statements are available to the public. If the company is listed, financial statements are available to the public, correct? The financial statements are available to the public. The directors will try to manipulate the financial statements to show a better picture, meaning there's audit risk. Are we clear? Your examiner can say, number two, the finance director left the company. These are general examination statements, okay? If the examiner says the finance director left the company, then what is happening? Okay, the financial statements which is being prepared by the finance director, there is a little delay. If there is a little delay, probably financial statements can contain a material misstatement. Yes or no? A general statement. Number three, software updates or changes. Your examiner can say, okay, the company moved from this software to another software. The accounting software was changed. If the accounting software was changed or updated, then what happens? Then basically, how did you bring in all the old information from the previous software to the new software? When transferring, there could be a problem with the opening balances. Because the closing balances should be properly brought as opening balances, correct? If you don't do that, then also there's a problem. Then also there's a problem, right? These are general statements, number three. Number four, the examiner can say, there was a fraud or theft. Then this has to be adjusted in the financial statements. If not, the financial statements contain a material misstatement. Another audit risk. Clear? Inshifa, clear? Inshifa, manasilayo? Manasilayo, Inshifa? Okay, so look here. A new accounting general ledger has been introduced in the beginning of the year with the old and new system being run in parallel for a period of 2 months. So you're running the old and new system together for a period of 2 months. When you introduced a new accounting general software, did you carry forward the closing balance to the opening carry closing balances to the new system correctly? Did you do that? That's the point. Did you properly do that? If not, if the transferring process, if there was a problem, that means your financial statements contains a misstatement. Now, where? 1, 2, second risk. I have my third risk. As a result of the increase in revenue, Minty has recently recruited a new credit controller to chase outstanding receivables. The finance director thinks it is not necessary to continue to maintain an allowance for receivables and so has released the allowance of 1.5 million. Why have they given you this 1.5 million? Why do you require this figure? What is the need for the figure? Why? Purpose of the figure. Well done. Well done. Superb materiality. Well done. You're getting it. You're getting it. Calculate materiality and tell me if it's material or not. Calculate materiality and tell me if it's material or not. Calculate materiality and tell me if it's material or not. Okay, Nabil has said 1.7% Ziyan, it's material. For 5 million, it's 5.8 means for 1.5 million. But 1.76, 1.8, quite reasonable, no? One 8%, so it's material. I can conclude it's material. Okay. That is the first thing. Okay, Minty has recruited a new credit controller to chase outstanding receivables. The finance director thinks it is not necessary to continue to maintain an allowance for receivables and so has released the opening allowance of 1.5 million. The finance director has released this 1.5 million. Opening allowance of 1.5 million is removed. My question. Let's say I have a company. Okay, I have a company, PPIM, let's say PPIM. You have to pay for classes. For about 2 years, you have not paid. You have just followed classes. You have to pay about 1.5 million. Basically, that's not the amount, but I'm just saying 1.5 million. You're not paying. Okay. What I do, I recruit a credit controller, Ramli. Ramli, come. You are here to recover all the outstanding debt. Ramli comes in. He comes here. He asks, give me the money. I want the money. You say, I don't have money. You genuinely don't have money. Okay. My point is, when you genuinely don't have money, by having a credit controller, can I recover my money? Yes or no? Can I recover my money? Yes or no? Can I recover my money? Yes or no? Everybody. Just because I have a credit controller, does that mean that I can recover my money? Yes or no? In Shifa, why do you say I can recover? In Shifa, why do you say I can recover? Just because I have a credit control in Shifa, why do you think I can recover? Credit controller will help. I'm not saying no. But how certain are you he will definitely recover? If you don't have money, what to do? If you don't have money, genuinely, if you don't have money, what to do? If you don't have money, you don't have money. Simple as that. So is it prudent for me to remove that allowance, assuming that the credit controller will recover the money? Yes or no? No, it's not. So basically, what am I trying to do? I'm trying to overstate. Overstate what now? What am I trying to overstate? By removing from the allowance 1.5 million, what is being overstated now? What is being overstated now? Profit? Yes. Apart from profit, what is being overstated? Well done, Saifullah. Receivables and profits both are overstated. That's my fourth audit risk. Are we clear, everyone? Are we clear, everyone? Niklesh, Nabil, Priyanka, Saifullah, Tirza, Ashraf. Are we clear, everyone? Okay, super. 4 risks identified. Next point. In addition, Minty has incurred expenditure of 4.5 million on developing a new brand of fizzy soft drinks. The company started the process in January 2013 and is close to launching their new product into the marketplace. Why is this 4.5 million given? Why? 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 Why do you have that 4.5 million? Well done. Super. Is this material? Yes or no? Is this material? Yes or no? Is 4.5 million material? Yes or no? Is 4.5 million material? Yes or no? How many percent? 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 5.355. Okay. Approximately 5.3, 5.5%, 5 to 5.3%. Okay, Tirza says 5.3%. Let me go with Tirza for the first time. Tirza, you're Tirza. Tirza, can I trust you? Tirza says 5.3%. So let's trust Tirza for the first time. Just joking, Tirza. Take it easy. So you're incurring 4.5 million on developing a new brand of fizzy soft drinks. The company started this process in January 2013 and is close to launching their new product into the marketplace. Correct. Super. Now my question is, what is the issue here? Do you find an issue? Do you find an issue? Do you find an issue there? Do you find an issue? Do you find an issue? Okay, what is the issue? What is the issue? Recognizing the 4.5 million. Okay, Nabil, be more specific. Explain. Explain. What did you mean by recognizing the 4.5 million? Started in 2013, it has to be apportioned properly. Number one, what is the risk here? You're developing a new brand of fizzy soft drinks. Okay, it's in the development phase. Okay, it's in the development phase. You can only capitalize development costs if the conditions are satisfied. What are the conditions? What are the conditions? Technical feasibility, commercial viability, management intent, cost, future cash flows. Without this, in line with IAS 38, intangible assets, research and development cost. It looks like the conditions are not satisfied, but still you had gone and capitalized. Conditions are not satisfied, but still you had gone and capitalized. Meaning increasing, overstating the profits, overstating development cost. Are we clear? That's my fifth risk. Are we clear? Understood, yes or no? Understood, yes or no? Everyone. The finance director stated that there was a problem in November in the mixing of raw materials within the production process, which resulted in a large batch of cola products tasting different. A number of these products were sold, however, due to complaints by customers about the flavor, no further sales of these goods have been made. No adjustment has been made to the valuation of the damaged inventory, which will still be held at a cost of 1 million at the year end. Okay, go through this, identify the audit risk, go through that, identify the audit risk, quick. Okay, no impairment has been made to inventory. Okay, I'm happy with that point. I know you're going to pick that point. I know you're going to come and tell me, Ziyan, IS2 says inventory is valid at cost and whichever is lower. So yes, there's a point. Valid, agreed. I'm with you. Accepted. Apart from that, any other point? Apart from that, any other point? Inventory overstated, Niklesh, I'm happy to take that as a point. Understood. Yes. Give me another point. That point is okay. That point is accepted. That's a straightforward point. Think of another point. Profits and inventory in Shifa here, it's overstated. That's correct. Any other new point? I'm not talking about my 6th point. I'm talking about my 7th point. Nabil, correct. Have they estimated properly? Estimated what? Estimated what? Estimated what? Saifullah, super. Come again. Explain me. Saifullah, super. Explain me that point. Saifullah, explain me that point. Quick. What is this returns you're talking about? Go on. Go on. Explain. Saifullah. There's a, yes, obsolescence of inventory leads to inventory overstated, taken. Saifullah, revenue should be net on sales and expected returns. Well done. There you go. The financial director stated that there's a problem in November with the mixing of raw materials in the production process, which resulted in a large batch of cola products tasting different. A number of these products were sold. However, due to complaints by customers about the flavor, no further sales have been made. You are selling, you've shown revenue, but if the product is not good, there will be returns. Returns has to be adjusted. If the returns are not adjusted, what happens? Your revenue is overstated. Your trade receivables are overstated. Guys, you understood that point? Yes or no, everyone? You understood that point? Yes or no, everyone? Brilliant. That is my 6th risk. That is my 6th risk. And of course, you spoke about revenue, inventory. That is my 7th risk. I'm not saying no. Accept. Accept. Clearly. As in previous years, the management of Mint is due to be paid a significant annual bonus based on the value of year-end total assets. Look at that. You are going to pay a significant bonus based on the total year-end value of the assets. Hold on. You're going to pay a bonus based on the assets value, total assets value, correct? That is the reason why, that could be the reason why your revenue expenditure here was taken as a capital expenditure, number one. Number two, you're showing what? You're showing warehouses as your own houses, rented warehouses as your own houses. Two, number three, what could happen? You're not 1.5 million allowance, you're going to write it off. Third issue. Number four, capital expenditure, revenue expenditure being treated as a capital expenditure. Number five, your inventory has to be adjusted. So there is a personal gain there. So because of all this, because of bonus, you can probably try to overstate everything else because you are self-minded. That is risk number 8. Are we clear entirely? Yes or no? Are we clear entirely? Yes or no? Everybody. I want everybody to give a response. Yes, give me an A. No, give me a B. Okay, super, lovely. Now it's 3:45. I'm giving you your break. Now you can have your break. Okay. Before you take the break, I want you to take 5 minutes, read this through. Before we attempt it, I want you to read this through. 5 minutes for reading. I'm giving you a 25 minutes break. We are meeting sharp at 4:15. Okay. 5 minutes to read this, a 25 minutes break. We're meeting at 4:15. Okay.
Fine. My bad. Yeah,
Okay.
that is all okay. Yeah. I think I changed this. This is fine.
Small team sound. Yeah.
Thing is, you don't get the sound.
Pressure. Go to Zoom and move. Give share. Share.
Hmm.
No, just click share. Advance. Computer audio. Share.
Okay.
Yeah, and share. Click share. What's the password?
Keyboard.
I can do it.
You don't need this thing, volume. Do we need it? No, no.
Hi guys. Hi. You're back. You're back. Shall we answer? Shall we answer? Everyone with me? I want a yes. Everybody with me? Everyone. So we have put up a format, right? So guys, in the exam, it's very simple. How your exam will look like is something like this, okay? In the exam, this is exactly how this is going to look like, okay? It's going to look like this. This is the exact exam view. Your platform will be on one side, your audit risk and response will be on the other side. So you are going to pick a risk and you are going to write the response. Are we clear? Are we clear? Understood? So can we work this on our own and then why not we do it? Oh, okay, I'm fine. Okay, there is a suggestion. So can we work this out on our own first? And then, sir, you do it. I'm fine with that. Okay, that's also fine. Do you want to do it like that? Do you want to, okay, first, okay, that's a better way of doing it, okay? So we can see where your progress is. First, you take up the points, you give the response, okay? And then what I will do is, I will do it with you. So you can see, okay, this is your answer. This is the answer that I am giving you. This is how you have to approach in the exam. This is how you have to approach in the exam. And you can see the difference and from there improve. Say what, everybody, are we good with that? Can we try that method? Where we try and analyze our individual self and then go forward. Everybody, I will guide you with one or two. What do you think? What do you think? Saifullah says yes, Tirza says okay. Others, everyone? Where that sounds like a better plan. Okay. But before that, I want to know something. I want to know something. First, I want to know something for clarity purposes. Okay, guys, students of PPIM, students who are coming from another institute, can I get an A? Another institute, not PPIM, can I get an A? So I can focus more. Students coming from another institute, can I get an A? Or is everybody from PPIM? No problem. Just because you're from another institute, that doesn't have any difference. Just that I can look at you separately. Okay, so theory done by another institute. Okay, superb. Nothing to worry. Superb. Go on. No, from another institute. Okay, superb. Superb. It'll help me understand you better. That's the only reason. Okay, we are not differentiating you. Okay, you're all our students. Brilliant, Saiful. Brilliant. Okay, now other institute students, how did you understand the session so far? You understood really well, or if you're a self-study student, so it's still fine, or you have some more clarifications. You understood really well, or you have some more clarifications, you have doubts, anything like that. Good. Okay, you understood the session. Really got it more clarified. Okay, super. So that means what we will work is on a bigger plan. Okay, guys, all eight with me here. YouTube ones, whoever is there watching recordings separately, yes, we will work on a plan. What I'm going to do is, I'm going to work with you very closely, right? How am I going to work with you very closely? Listen to me. So we have the session today, you understood this. Okay, super. I want you to start answering this on your own. And then I know according to my schedule, I have to meet you only once a week. But can I make it twice a week? Another day, a weekday evening. Can I meet you maybe from 6 p.m. to 8 p.m.? You don't have to pay anything. You can just come. No problem at all. Ziyan, yes, we want another session. Give me an A. No, I'm fine. We don't want another session. Give me a B. Yeah, I got Inshifa saying A. Afzal A. Tirza A. 7 p.m. onwards, please. Okay, fine, Nabil. 7 to 9 p.m. Okay. So what I'm going to do is I'm going to fix another date. Okay. So let's do it like this. Okay. Now, what the question that we did, Minty Gola, I'll share it in the group. I want you to start answering on your own. And the weekday that we are meeting, we are going to answer it together. So you know, okay, this is where my gap is. I fixed my gap. It's learning. You're going to learn from there. Super. Okay, brilliant. Saifullah. So let's fix a date now itself. Okay. Can I? How about Wednesdays from 7 p.m. to 9 p.m.? How about Wednesdays 7 p.m. to 9 p.m.? Everybody, guys, but it's like this, you understand? If I am doing this, I'm doing this only to make sure that I'm giving you an additional session support. I want everybody to be there. If not, my time is wasted. No, guys. I want everybody to be there. If you're okay with Wednesday, tell me it's fine now. If you're not okay, we will move it to another day. But let's discuss it now and we'll finalize it. Are you okay with Wednesday or not okay with Wednesday? Everybody. Priyanka okay, Tirza okay, Injifa okay, Nabil okay, Afzal Ahmad not okay. Okay, Afzal, what's the issue? Do you want it on another day? Work. Afzal, sometimes we have to adjust. Okay, he's saying Friday. Friday for me not possible because I have another lecture. Afzal, give me another day. I'm okay with Tuesday also. Tuesday, are you fine? Yes, Tuesday, everybody else is fine. Afzal says fine. Ashaf, Niklesh, Inshifa, Tirza, Nabil, everybody. Nabil says no. Okay. Okay, fine. Fine. Not 7 p.m. to 9 p.m. Can I make it from 8 p.m. to 10 p.m. now, Afzal, on Wednesday? 8 p.m. to 10 p.m. you still have work no, right? 8 p.m. to 10 p.m. Afzal? Yeah, 10. Okay, guys. So 8 p.m. to 10 p.m. works for everyone. Okay. So everybody, Wednesday, what we are going to do is you are now going to sit and rework this question. Okay. You know how to rework. Okay. Don't worry. Part A, I'll be covering. Part B, I'm covering. Part C, also I'll cover. Part D, substantive procedures also I'll cover. Don't worry. I'll cover everything. Okay. But first, like I got a notification. Okay, first let's try it on our own to understand how we are figuring it out. Okay, the very first thing I want you to do is everybody is on our TRG group, no, the group expert WhatsApp group. I want you to go and try this. Even now, you can try it. Try it on your own. Go back now. Go back to audit risk. Go back to your lectures. Okay, you go back to whatever we've done previously. If you've got PPIM's recordings, go back to recordings and have a look at all this and start answering. I know we are not going to get it right the first time. We will never get it right the first time. We are not going to get it right the first time. But don't worry. We have 1 month to go. Last September, when we started the revision also, this was the same thing I told Mariam. Mariam was the girl who got the world prize winner. Okay. We told her, everybody around, I told her, well, we're not going to get it right the first time. But eventually we will. This is the start. You understand? Like trying to ride a bicycle. You are going to fall. But It's okay. Don't worry. You have people around you who's going to support you, who's going to help you do that. That's why PPIM is there. So, like we discussed, okay, super. First thing, you're going to sit and walk through this, understand where we are going wrong. On Wednesday, we sit and write the answers. Sounds like a plan? So Wednesday, what I'll try to do is, if possible, I will answer this and I will do another question also. So I can give you more time. I'll try to do, it's okay if I go until 10:30. I'll try to do 2 questions Wednesday. Okay. We will answer this and we'll answer other question. Super. Okay, well done. So my plan is for next Wednesday. And next Saturday when we are meeting, we will try to work on substantive procedures. And if we work on substantive procedures, which is a major area of your syllabus, I can finish this. So if that is done, the following week, Wednesday, I'm going to meet you again. And then Saturday. So I'm not giving you 4 hours. Probably I'll give you about 6.5 hours a week. We push like that. Got it, everyone? Yes? Got it, everyone? Yes? Okay, super. Now, let me share this with you. Right? All of you are there in the group, right? All of you are there in the group, right? Everyone? You're in the group? Okay, super. So, expert success plan, there you go. Okay, I've just shared it to the group. Okay, and guys, when I message in the group, please make sure that you respond back to me, because only then I know what is required from you and how I can help you, right? Please respond. I mean, we are matured, we are adults, we will have a good conversation. And I'll share a lot of materials also with you on the group so that you can also read them. Okay. So now it's a time for you can take your time, take 1 hour, 2 hours, that's still fine. Don't worry about timing. First start typing. I want you to type your answers, not write, type. Type it, and Wednesday we are going to meet. I'll get the Zoom link shared across so that we can work the answers together. Wednesday, 8 to 10 p.m. Done? Everybody? Super. Thanks for attending the session. We'll meet on Wednesday then. No problem. Bye-bye.
Mm.